Hey, hello, this is Martin. Welcome to a brand new episode of Markets Tomorrow, which is a daily market technical analysis where we look at what happened in the Nifty, Bank Nifty today and how we can better plan for a better trade tomorrow. Okay, and this is for October 5th, Tuesday 2021. If you're not subscribed, please subscribe right away and then click on like button if you consider it, and also share it to your friends and so that they can also benefit, and it means a lot to us. So what I did was a correction, seems to have halted, right? And then we had a good bounce today. Let's see what exactly happened. So as usual, we'll be looking at the market analysis based on all of these parameters on the charts that you see on the left side. In addition to that, we would have open interest analysis and institutional participation and global cues, and then we'll wrap up with some action numbers also. So without wasting time, we'll get into the slides, and don't worry, we'll have the screenshots of the charts in the next slides. Okay, so we'll just brief and then see the charts. Brief, see the charts. That's how it goes. So the price action today was 1% up move nearly, right? And it closed green, right? At the support region. And remember that it was an indecisive, a doji candle that was on Friday. So Monday it decided and it bounced up, right, from a support. So Bank Nifty, same thing, had 1% nearly, closed green, and it was at a support, and it was a hammer. Hammer indicates the bull presence with the long wick size, right? Exactly the same. On both indices, intraday price action was a gap up opening, right? Nifty and the Bank Nifty both gapped up nicely and then started trending up, and then there was some consolidation with rest, and so this is what happened in the price action. You see that. See the index on the Nifty 50, right? You have an industry candle, there's a support zone, and then it bounced up, closed green. It was a bullish hammer at a support zone, it bounced up, and then further bounced up today. There was some Bank Nifty on the right side. Here also price action, if you see intraday 15 minutes time frame, if you see that it was a gap up opening, and then it further trended upwards, and then there was minor dip and then consolidation. Not more about that. So at 17,700 there was a lot of consolidation. It was facing some kind of resistance at the 17,700 and 750, that range, right? In the Bank Nifty, you can see the same thing happened. The gap up, it trended up, and then there was a consolidation after a small dip, right? There was some resistance at that zone near 838,000. So support resistance level, if you see, you can see that on the left side, the Bank Nifty is good. The psychology of rounding numbers, 18,000, and before that we have another resistance of 17,950 where it was made the all-time high. So these two are the resistance upside, and then you have 18,300, which is the Fibonacci projection levels also on the upside. It's not seen here. Yeah. But downside, you have another resistance that is there at 17,600 to 17. 17,600 to 17,800. That's on the resistance. That is exactly where it hit, and then found it's little difficult to cross above that because it had resisted previous 2 days. Also, if you see the same level, right, and previous week also there is resistance here. So that's exactly the zone where it resisted. So this is critical to cross this. 17,750 is very critical. That's a resistance 1, 950 resistance 2, which is all-time high, and then above that rounding number 18,000. So 3 good resistance supports. Downside support 17,600 to 17,650, 17,650 that levels, and if that breaks, it's 350, 7,350 and 7,450, and then that breaks, it is 7250 to 200, and then if that goes 17,000 to 7150, which is Fibonacci retracement levels. Right side Bank Nifty, you can see that the 37,300, 37,400, that is where it took the that's where it took the support today, but it bounced previously from the 37,000 kind of levels, right? So there is a gap up, so that gap is also forming as part of a good support, right? So that's a good support for the Bank Nifty that you're seeing, right? And above that resistance, you can see that it's at 37,700 and 38,100 that level. At the top we have resistance, but before that you have some resistance at 37,800 also down here. Right? These are all previous resistances, right? That would now act as resistance again, right? Previous last 2 days you can see the same region it had failed of 37,700 and 37,800. So that is a zone that has to be looked at, right? 37,800 is going to be critical whether it crosses or not, because that is a phase resistance. And downside you have 37,300 where it has taken support, and then below that you have another previous swing low which is 36,900 to 37,100, that zone, and below that you have 36,300 and 36,500, which is Fibonacci retracement levels, right? So that's the support resistance for the Nifty and the Bank Nifty. The momentum divergences you see, right? So momentum you see it's bullish on that on the Nifty, but on the Bank Nifty the momentum is not bullish. It just remains a side zone. It has to catch up to climb over the 60 levels at least, right, to qualify for the bullishness. So here this is divergence that is shown in the Bank Nifty. As in the last day also we discussed about this. The price is moving up, the momentum is coming down. The divergence, it got confirmed today, and there is a bounce that happened. Whether it will meet the target of all-time high, we will have to wait and see. The right side Bank Nifty is a weekly chart, mind and that. So weekly also this. Here this is left side Bank Nifty is on a divergence, momentum reverse divergence seen on the daily. This is momentum reverse seen on the weekly, and it also seems to confirm the price moved above the last candle. And whether it will meet the all-time high in Bank Nifty, let us wait and see. It depends on whether it works out or not. But there are divergences that is supporting, and the bounce has happened, so bullishness is back in place. But look at the trend. Look at the trend, right? It had crossed over to negative zones, right? The red has crossed over on Friday, and today that red had gone down, and then the blue has crossed over. That means we're back in the bull zones. But remember that the strength is weakening, right? It has been dipping. Strength is losing the strength. It has now reached 36, but 36 is always reasonable. Anytime it can bounce backwards. But yeah, strength is dipping. Right side, Bank Nifty had the same thing. It had crossed over the bearish zones on Friday. Then Monday it crossed over back to the bullish zones. But the strength is dipping and is below the DMI, which is some kind of bearishness. Right? Trend is not steady. It's not good enough strength. But strength is back into the bullish zones, at least we can say, right? Momentum also, except for Bank Nifty, momentum on the short term for Nifty is remained intact in the bullish zones. Now volatility is the big story. It had shot up to 19 level and now it has come to 16 level. So that's in 11% more than that of correction that has happened. Today only 3% drop. Implied volatility is near to 16, and then IVP is about 31, but still not that great levels. We need for the go up to the 70 levels before the sellers can benefit. Option sellers can benefit from it. But yeah, maybe there is a chance that it can take support from this region and then bounce back. Spikes can happen, the mean reversion nature, right? It shot up to 19, so it may be forming another range at the higher level, just like it used to hover around between 11 and 13 for so long time. It may be consolidating or forming a range. So that's about VIX and volatility. The options data analysis, if you see, the left is Nifty and right is Bank Nifty. You can see that the expiry is actually 3 days, right? It's on Thursday, like tomorrow or Tuesday. But look at the Nifty support levels. 17,600 is having good support, 17,500, so both have good supports. Resistance support is 18,000 and 17,700. So the 17,700 is facing a resistance. That's what we saw today. Put call ratio 0.87 is near to bullishness, and we had a long build up clearly on the Nifty. Bank Nifty, look at the 36,500 and 36 is where the highest support is there. So it's gap there. 37,000 also has good put trading. So upside 38,000 and 37,500, both are high. So 37,500 and 38, that is very critical resistance that the Nifty will have to overcome above. Now there is also short covering. That means it's bullishness. Like when people who are short now turning back to long. So there is it can give some more up move tomorrow probably in the Bank Nifty. So there is bullishness in the charts and good support and resistance like matching the levels in the charts also seen here in this operators analysis also. Now sectorial performance, if you see ID bounce back 1% up after 7.5% of fall, nearly to that. So it has taken support at the Fibonacci 23 level, but the dollar is still at the very high level, so there is a chance that the momentum can catch up some more, which is required because right now it has slipped to the sideways. We need to catch up on the short term before we can pick up the stocks again and then trade on that as before. But a good correction has happened. Metal shot up 3%, right? But moment is still sideways. We'll have to wait. Auto formed an indecisive with 0.5% up, right? It's not falling. Moment is still in the bullish zones. So auto is, it's bullish. Although there is some indecision for consolidation that is happening, and there is a bullish reverse also which started to work, and then but it is not breaking out, right? And there is, remember that there is a breakout double bottom resistance is there. We have to wait for the index to cross the resistance before we pick up the auto stocks, right? Wait is for metal and wait is for autos. But pharma, it moved up 1.5% from green bar. Momentum also shot up in the bullish zone, so time to pick stocks in pharma. So pharma is turned back bullish. FMCG again consolidation, decisive. Then there was 8 days of correction and the momentum also slipped. Now you have to wait for the moment to catch up. So till then, stay away. Reality, super bullish stock of the year of the 2020. Like 30% move happened in 5 days earlier, and today also more than 2% of the move happened. It's a cup and handle breakout, so big moves are over, and the cup and handle pattern is on weekly, monthly, that higher time frame. So it is going to move further up, right? So reality and pharma have turned bullish. Other sectors got to wait for the momentum to catch up, which has slipped previous weeks of correction in the Nifty, right? So let's see what is institutional participation. Yes, the Fyers are back into buying mode. Around near to 991 crores of buying happened today. Friday also was a little bit of buying, right? But EAs were selling a little bit last 2 days, right? So Fyers are back into buying mode because they were selling heavily, around 4,000, 5,000 crores they were selling last week, previous week. So the back into buying mode is giving hope. Now look at the dollar index. Right side you have the dollar index, which had broken out of the major resistance zone of multiple years, and then it had faced another resistance immediately on the top of that is also major resistance, and it just retraced a little bit. Just 2 days was bearish, but it is still at a moment of support, so it can again bounce back and do that time too. So it may take consolidate some. It may take some time before it can break out of this, but dollar is strengthening like anything, and USD INR currency pair also is shooting up. And today also it tried to break out of the support zone, but there is a channel top resistance and there is some kind of triangular breakout pattern that is coming, right? Don't know whether it's breaking out or breaking down. We'll never know that. But this chart and the RSI momentum indicator is showing that there is a range shift. From the sideways, it has moved after a long period of time into the bullish zones. So there is high likelihood that it will at least attempt the channel top in October for sure. Dollar is going to shoot up and INR is going to depreciate further is what the charts are saying. Now the crude oil, yes, when the dollar is shooting up, at the same time crude oil also is shooting up at 3-year high levels of 70, nearing to 70, so we can see green candle today also. So that is really, really bad for the economy, right? The right side Vauld, you can see that it is, whenever the dollar is strengthening, gold will slip. So it attempted to climb back to the resistance zone, but today you can see the position is still hovering around here, right? So it's in the channel, so it may continue to attempt to get back into the support zones and then to the channel top and then try to break out. So, but it is hanging on, right? It's not ready to fall down, at least, right? So below you can see that this is the US markets as of now, but you'll have to check these details tomorrow, pre-market again before. But as of now, you can see that there is major bearish moves. You can see that the first three is Dow Jones and S&P 500, and then Dow Jones, Nasdaq, and S&P 500. So it's kind of flat and slight bearishness seems in Nasdaq, but since Dow Jones is green, so that's the usual story. So you can the US market, the European market is also showing some kind of flatness as of now, but it's too early to make anything out of that, right? Yeah, so few actionables. So Canfin Homes, it's in the weekly chart that you've seen, it's a cup and handle breakout. There was some resistance consolidation that was happening here, and then previous week, this week, previous week, and this week also, it had clearly, breaking out of a very good, rounding pattern. So it may be breaking out furthermore and then retracing back to this neckline and forming a cup and handle. We don't know, but this is a good time to enter with a tight stop loss below the neckline candle. This is swing or positional kind of trade that I would say. Right side you have the trend limited trend Tata's retail arm, and then It's trending weekly very nicely in a channel. And it is at a channel top, so it could retrace and give you, somewhere in the median level, it would give a chance to to enter this again to catch the trend trending up more. The bullish momentum can be clearly seen. Trend also is very good on the daily and the weekly time frames and the monthly also. So two momentum trending stocks to trade, swing trades probably, right? Not entirely. Now, just to wrap up, there is cautious bullishness again. The short term, that is a view, from my side, right? Your view could differ. This is my inference and my view on the market as well. So it was mild bearishness the other day, but market always fools you whenever it is not predictable. It's random, and so this is what. But there were indications that it could bounce up, right? So I was kind of neutral to bearish, but now I have turned to bullishness just because of these reasons that is listed here. The reverse divergence seems to be working confirmed on the Nifty and also Bank Nifty. It's one reason. Trendless crossover the bullish. The trend indicators ADX crossed over the bullish and that too from a bounce from a support zone. Again another bullish reason. Fyers back in the buying mode today. 2 days. Good. VIX has cooled up to 11%. It's good. 11% cool off. It's good, right? Fear and greed is reduced. So every dip is being bought. So you can see that the Nifty is correcting the third time in the month of September. 3 times in the month of September. October has slowly started. So in the last 1 month, 3 times correction happened, but every time it is at below 3% kind of correction is what is happening, right? Instead of a big up move and then a big downfall, that kind of thing is does not seem to happen in this bullish market. Corrections do happen 3 times. If you see, you can see that it is trending up, correcting 2-3%, and then again trending up, correcting 2-3%. That's exactly what is happening, right? So that's the summary. So volatility has cooled off from 19 to 16, as I said before, and could spike and mean reward. So like positive strategies can work, right? So probably it is forming a new range between 20 and 15 or something like that. Right? Never know. Yeah. So choppiness can always be there as it shorts up, right? So the volatility, the premiums will also be there, which is good for the sellers. But choppiness intraday from intraday buyers, and we careful on the price action. So calendar spreads, ratio spreads, and fair strategies that can work at this if the VIX is remaining at this range. So hope this stock helps you to come out with a view of your own, right? It helps you understand what happened in the market, what is happening previous several days, and how we can look forward to make a plan on your own to trade. So if you like to hit the subscribe button and keep the like button, you can consider that, and also consider sharing it with friends so that they can also benefit, and it means a lot to us. Thank you so much for watching. Happy trading, happy learning. Bye.